Welcome to topic 5 of this module on the economic and financial plan. In this topic, we will discuss issues related to the sources of financing needed to launch a business project. As we saw in the video from the previous topic, after considering what initial investments are necessary and the cash flow generated throughout the life of the project, it is essential to study what resources we will use to meet our financial needs, as well as to calculate the cost of those resources. The main objective of this stage is to determine how the investments made will be financed, whether we will use our own resources, which do not need to be repaid, or external resources, which do need to be repaid. In the latter case, it is also important to consider how the repayment term of such resources will affect us. Among the sources of internal financing, we find equity capital, that is, the funds contributed by the partners. The owners are the ones who, if things don't go well, are at the greatest risk of not recovering these amounts they have contributed. In other words, they are the ones who bear the most risk. In the early stages of the business, public aid and grants can also be important. In particular, there may be calls for applications aimed at certain groups and sectors in which our business idea could fit. For this reason, it is important to carefully read the terms of the call for applications, paying special attention to everything related to when the aid is granted, whether or not there is a possibility of having to return the amounts for failing to meet the conditions, and so on. Among external sources of financing, bank loans are particularly noteworthy. These amounts must be used to finance long-term investments, and interest is paid on the total amount that has been lent to us. This interest, as we often hear in the news in the case of mortgages, can be fixed, variable, or also mixed. For their part, loans are used to finance working capital, the day-to-day operations of the company, and generally, interest is only paid on the amount actually drawn. At this point, it is also worth mentioning the Official Credit Institute, or ICO. It offers specific lines of credit aimed at companies and entrepreneurs. Credit institutions are actively involved in its operation, as they are the ones who assess and assume the risk. We can also mention microcredits, which are small-scale financing aimed at specific sectors and activities. When it comes to financing the acquisition or use of an asset, we can choose options such as leasing, where we make regular payments, and at the end of the contract there is a purchase option. Or like renting, where you pay a fee that includes maintenance, repair, replacement services, and so on. In the day-to-day operations of a company during the process of collecting payments from clients, we can use instruments such as commercial discounting, which allows us to collect outstanding invoices from clients in advance, and for payments to suppliers, confirming allows us to advance or delay payment depending on our cash flow situation. Lastly, we can also refer to other sources of financing, external ones perhaps less well known. For example, mutual guarantee societies provide a guarantee that makes it easier for us to obtain bank financing under better conditions. Venture capital funds and companies provide financing to SMEs by taking a temporary minority stake in their share capital, and they are specifically designed to facilitate the growth of the company. In what we commonly know as crowdfunding, we find collective financing platforms that professionally connect people through electronic means. A variety of people who offer financing in exchange for a return are connected with individuals or legal entities who request financing on their own behalf to allocate it to a participatory financing project. Depending on how the financing is structured and the type of return, there can be different types. Business angels are individuals who usually have significant wealth and contribute their own money, and at times their time and experience. To conclude the video, we need to mention the calculation of the cost of capital, which is what will be applied to the business plan. First, for each source of financing, we have to calculate its cost. In the case of external resources, the cost would correspond to the interest we are charged. For equity capital, the calculation is more complex, but the idea is that the partners, since they bear more risk than lenders, will demand a higher return from the business. In other words, higher risk means a higher required return. After that, you would need to calculate the weighted average of these costs depending on the proportion that each source of financing represents in the total capital of the company. However, to make an initial estimate, we could consider only the cost of borrowed funds. With this, we conclude this 5th topic of the unit. Thank you very much for your attention.